Hello guys, today we'll be talking about trading psychology. I know you all know that trading psychology contributes 80% of trading and 20% is technical analysis and the rest. So that means trading psychology is one of the most important things which you have to master as a trader if you want to be consistent, if you want to be profitable, if you want to be a professional trader. Without trading psychology, you cannot reach that level. So you have to start today to work on your trading psychology if you want to be a better trader. So first of all, let's talk about trading psychology. There are many things, many aspects which contribute to trading psychology, including fear, greed. So today we'll be talking about fear. There are four trading fears which most traders face, which most traders encounter, which most traders don't overcome, which most traders fall victims to. So one, the common one is FOMO, fear of missing out. Two, fear of leaving money on the table. Three, fear of being wrong. Four, the last one, fear of losing money. So we can talk about FOMO now. So FOMO, you all know that it's when you have fear of missing out. You jump in a trade which is not even there yet. You jump into a setup which is not even there yet because you just couldn't wait. You thought that the market will leave you, but then you see this beautiful setup, but then it hasn't played out yet. Meaning your signal is not yet there, but then you jump into it either way. Let me give you an example. So let's say price is ranging in between this level. This is our resistance, this is our support, and price is ranging in between this level. And price is somewhere here, it's going towards the resistance, but then it's not yet at the resistance. At first, you're supposed to enter near the resistance because you stand a greater chance of you putting your stop loss next to it, such that you risk less, and price will go down to your support. So price is somewhere here, still far, maybe midway. So your support is here, your resistance is here. So price is midway, it's going towards, but then midway starts to lose momentum. So what do you do in your brain? Because you are not yet a professional trader, you are still struggling with FOMO. You think the market will just reverse and goes down. So in your brain, you want to sell quick. You cannot wait for price to get to your resistance. So what do? You enter midway. You enter midway, and now you put your stop loss here. Look at the difference. Look how big your stop loss will be. And if you're using a standard lot size, if you're using like the same lot size, that means you'll be risking a lot now. So the market continues to go up, continues to go up. Where you sold here at the middle rather than selling near the resistance. So now you are losing. You are losing. Instead of waiting, now you are losing money. That is FOMO. And now while you are losing the money. Now you're thinking, damn, why did I enter? The market was not yet near my resistance. Now you start to feel sad. So you were a victim of FOMO. And how do you deal with FOMO? Just like anything in life, you have to be aware first. That's the first thing you have to do. You have to be aware that you have FOMO, and then you start to write it down. You start to journal. You start to journal it down. Every time you see a setup, make sure that you are aware you might be subjected to FOMO, you might be subjected to fear of missing out. And you have to understand that even if you miss out, but then you followed your rule, it doesn't matter. Guys, one thing you have to understand is a trader. Nobody can predict what will happen in the market. You can only analyze. You can have one of the best analysis, but then nobody will predict what will happen. Nobody knows. All you can do as a trader is to follow your plan 100% of the time. Even if you follow your plan and you still lose, if you follow your plan and market doesn't respect your setup, you have won. You are a disciplined trader. That is a definition of a disciplined trader. So always make sure that you follow your rules. First, be aware that you have FOMO. Two, write it down and try to work on it. Make sure that when price is not where you want it to be, do not enter. Yes, you might think, yeah, it will reverse, but if it reverses, but then you followed your plan, you don't have to worry about it. In fact, you have to give yourself a reward. Try to give yourself rewards over rewards. This is one of the things which I used to do when I followed my plan. Regardless of what happened today, I might have lost money, but I followed my plan. Price might have reversed and went against me, but I followed my plan. But if I followed my plan, I always rewarded myself. I would buy myself something, I would take myself out, I could do this for myself. That way you start to train your brain that if you follow your plan, if you do what needs to be done regardless of what the market do, because no one controls the market, you get a reward. Over time, you just start to doing things which you have to do because your mind now is at that level. So follow your plan. That's the third step. always follow your plan. So 1, be aware that you have FOMO. 2, journal it down. Journal how you're thinking. Journal before the trade, during the trade, after the trade. And then 3, make sure that you reward yourself. Reward yourself when you followed your plan. Meaning you must follow your plan. No, 3 is following your plan, and then the last one, the 5th one, is to reward yourself. So you have to reward yourself every time you followed your plan, every time you stick to your rules.